Good morning, everyone. Welcome to 24/7. My name is Niharika Valia, and I am with you with the area of JAIIB 2023. And we're talking about AFM today. Okay, so when we talk about AFM, what are we going to discuss today? Okay, so today we'll be talking about the area of AFM. So let's move on and talk about it in detail. We'll be starting with the topic of company accounts today. So done with the accounting cycle, moving on and understanding the topic of company accounts. What do you mean by a company, everyone? What do we exactly call a company? Company is basically an artificial person, right? Having a separate legal entity, an artificial person having separate legal entity. And when we talk about artificial person, separate legal entity, then there is a transferability of share which is possible, right? If I want to give my share to someone else, it's not possible in a partnership firm, though there are restrictions in a public company, in a private company, but still transferability of shares is available. Artificial person, separate legal entity, transferability of shares, and they have a common seal. The company cannot sign on its own. So the managing directors of that organization does that for them. So when we talk about a company, company is just like you and me. It can buy a particular property, it can sell a particular property, it can operate on its own, it has its own PAN card, it has a separate legal entity in the eyes of law, and that is how we define a particular company. And a company also has a perpetual succession. The shareholders and the organization is not deeply connected. The shareholders can change, but the organization will still stay. That is what they define it as, the perpetual succession, right? So let's talk about the details there. Now, let's talk about in these kind of organizations. So the first thing that happens is, in an organization we have different kind of shareholders. There are two kind of shares in these kind of organizations. If I talk about the shareholders of an organization, it would be of the following two types. First is preference shares. Second is equity shares. Preference shares refers to those shares which are having a preference over the others. That means they have a preference over the dividend of that organization whenever the part of profit is given to them. That is first given to the preference shareholders. They get preference. That is how we specify the term in English. Now, preference means giving importance to the other person, giving more importance rather. So that is what the preference share is about. They get dividend before equity shareholders get, and at the same time they also get their share even at the time of the liquidation, or when the company is dying, even then they get their share before equity. So I can say the preference shareholders are, you can call them the jealous shareholders, which says that whenever you pay equity, whenever you are supposed to pay equity, pay me before that. That is what preference shareholders say. But these people do not have any voting rights. The preference shareholders only get the share in their profits, or that is to specified amount, while they do not have voting rights and they are not the true owners of the organization. The true owners are the equity who are more or less living the life of a scavenger. Whatever amount is to be supposed to be given to everybody, income tax department, bank, and even the preference shareholders. Once all the payments are made, whatever is left, if good amount is left, then it's their, you can say that's their luck. If there's if the very limited amount is left, then that is what they will all have. So that's how they define this particular term, equity shares as well. Right? So whenever we talk about this particular topic, it says that in these kind of organizations, people are working in such a way that they have limited voting rights. That is, in terms of preferences. Equity has all the rights because they are the risk takers. Whatever the residual amount is, that is their destiny. These people are open up to all the risks and are able to do the work in a proper way by getting the dividend after everybody else, and even at the time of liquidation they don't even know whether they'll be able to recover the money or not. Right? So this is the first question. As per the details, the first question says the shareholder who have a right to receive the arrears of dividend from the future profits is the participating preference shares, non-cumulative preference shares, cumulative preference shares, or redeemable preference shares. What would be the correct answer, everyone? Go ahead, everyone. What would be the correct answer? Okay. The one who has the right to receive the arrears of the dividend. See, in terms of preference shares, now they have different types of shareholders. The preference shareholder is again of around 8 types. Yeah, it is of 6 types actually. Then, if we talk about those 6 types, among them, the first one is participating preference shares. These have the chance of getting a part in terms of surplus if the organization someday makes an extraordinary amount of money. First of all, if this extraordinary amount is received, first we pay to the preference shareholders and then we pay to the equity. Once a specific amount, say 10% is paid to the preference, whatever is left is to be paid to the equity. How do they work? If the remaining is to be paid to the equity, they are not working in a proper way, what will happen? Then, in terms of equity, the preference is going to have a surplus, equity will not have a surplus there. So if the equity is not going to have a surplus, first the extra amount that is received will be given to preference at say 10%. Remaining will be given to equity, say at the rate of 15%. They have a higher share because they have more risk. So whatever amount is still left is still very, very huge. The company says, what will we do by keeping the entire amount? I think equity, we are giving you more dividend. There, this preference shareholder gets jealous and says, no, no, even I want more. So they say, we are ready to pay more for this preference shareholders. Just give this money to us. That is what we call it as participating preference shares. Then we have non-cumulative preference shares. There are two kinds of shareholders in terms. There is one participating, the other one is non-participating. Then in terms of cumulative means to accumulate or to collect, right? So if we talk about cumulative preferences, these are those preferences in which the organization says that there are multiple in an year, the company makes a huge profit. They gave to the preference share their dividend. They received their dividend. Then the company faced losses in the next year, so they couldn't pay the dividend in the next year. First year they paid, second year they couldn't, third year they again paid. So in which year they paid, and this year they are just paying for this year. In this kind of situation is called non-cumulative preference shares, where if we cannot pay in one particular year, that year is crossed and you will get the amount only for the upcoming year. While in terms of in terms of cumulative preferences, the company says, yes, we were not able to pay in the previous year, so we will also pay for the previous year in this current year. That is what they call as cumulative preference shares. In our country, the last one, redeemable preference shares. Redeemable preference shares refers to those shares which have to be repaid within a specific period of time. In our country, we issue only these kind of preference shares, not the irredeemable. We cannot keep them forever with us. So it has to be repaid within a period of 20 years of time. That is what we call it, redeemable preference shares. So in this case, the correct answer is cumulative. That is to collect the dividend if it was not available earlier. Dividend are paid by the companies to reward the shareholders, right? Now, one of the major conditions for allotment of shares is full subscription by public, receiving minimum subscription, special resolution in GM, general meeting, or none of the above. When a company issues shares to the public. Today, we'll be covering limited number of MCQs, but I'm going to cover a good amount of concept so that you are able to catch up with what exactly company accounts is all about. In terms of share issue, whenever a company is issuing shares now, 90% of the shares that are issued to the public has to be taken up, right? Then that means if it is less than 90%, we will have to return the entire money that we receive from the people. So in this case, it is full subscription by public, receiving minimum subscription, SR, or none of the above. In this case, one of the major conditions for allotment is you have to finish up with the minimum subscription. 90% of it has to be taken up by the people. Otherwise, you will have to return the entire money altogether. Receiving minimum subscription says there is a minimum amount that must be raised when the shares are offered to the public during the issue of shares. The minimum subscription is generally set by the board of directors, but it cannot be less than 90%. Yes, as per the Companies Act 2013, it cannot be less than 90%. Okay, so this is how they take this up. The next question. In terms of shares, there are something called bonus shares. These are shares which are issued for free. That's absolutely correct. You don't even have to pay a penny. You already have accumulated reserves in the organization. What happens is company has share capital. The shareholders do not take the entire money. They take only a chunk of it. They take only this much amount. The rest is still with the company. If the company gets accumulated reserves, there's a huge amount of reserve that they are currently having. So they will take this particular accumulated reserves. So when they take this reserve with themselves, then what will happen in this case? This reserve is used to issue more shares. We do not ask them to pay. So we take out money from these reserves and issue more shares. When we are issuing more shares, it cannot be issued from free reserves, SPR, capital redemption reserve, or revaluation reserves. Bonus shares cannot be issued from it can be issued from free reserves. There is no limit on that. We can also use SPR or security premium reserve. We can also use CRR, but we cannot use revaluation reserves. Why? Because in terms of revaluation, if the books of account says my machinery costed rupees 10,000, now it costs rupees 12,000. Only the value is increasing. We are not receiving any money from it now. If I say that I have this thing or I have that thing, now the point is if I have this thing, only its value is increasing in the books of account. I'm not selling it. I'm not buying it. There's no movement of money. So in this case, the point is the valuation is increasing, but you're not getting any further money to pay to people. So in this case, it's not allowed. If you have cash realization, only then it's allowed. So company may issue fully paid up bonus shares to the shareholders out of the free reserves. Security premium account and capital redemption reserve account can be used, and free reserves also can be used. But revaluation reserve, that is not allowed to be used. Okay, the next concept says calls in arrears given in the balance sheet under reserves and surplus, shares pending allotment, shareholder fund, or long-term borrowing? What would be the answer, everyone? Calls in arrears. Calls in arrears means the amount which is outstanding from the people who are supposed to pay us for the money. So we have asked the shareholders twice, thrice, many times to pay, but they didn't pay. So this calls in area, that is their outstanding amount, will be shown in reserves and surplus, share pending allotment, shareholder funds, or long-term borrowing. Calls in arrears is the amount that is due. So this will be shown in the shareholders fund only. That, sir, you were supposed to pay us, but you haven't paid us yet. So it would be shown, like for example, if we say that the share capital is of rupees 1 lakh, there the amount which is still outstanding, that is calls in arrears, would be deducted from it, and the remaining is in our hands. Right? That's how we define the shareholder funds. Next point, the part of loan and interest due in the year is recorded under short term provisions, other current liabilities, non current liabilities, or none of the above. The part of loan and interest due in the year, the amount that we are supposed to pay in this particular year, is a current liability, not a non-current liability, right? So basically, the non-current part is out of the window. Short-term provisions is basically the anticipated loss that we are trying to note down. It's not an anticipated loss. We know that we might have to pay these people in the upcoming year. So the part of the interest that is going to be paid in this particular year would be kept under the current liabilities there, right? These are the various questions that I'm ending with today. So if you haven't reviewed our courses yet, our JIB new course is also here, so kindly go ahead. The new batches here, you have limited time and a huge amount of syllabus to be preparing from, so kindly take out time and check out our website for the further details, so that you get this particular pack at the lowest amount, as currently our classes are going on for this new batch. And what you can do is you can explore regarding this new batch from our website. How do we do it? Just go on to the area of www.adda247.com. There you'll find all the details. Here, click on the area of JIB and CIB. Click on the area of JIB and CIB Kamaha pack. At this point of time, this is the perfect time to buy the JIB Kamaha pack or JIB and CIB Kamaha pack. Why am I saying that? Double validity is going on. But what is this Mahapack about? See, if you're preparing for this examination, then first of all, you need syllabus classes. You also need MCQs testing. You also need ebooks. You also need revision batch or numerical batch, whatever batch is coming up. That's right. So if you're preparing for this examination, the most important thing is you buy this Mahapack. There you get test series, you get videos which have of the classes which have already been done. That means English medium and bilingual. Both of the classes are available for you. And that too, you are not only getting JIB, but you are also getting CIB. There you have 12-month validity in this JIB and CIB Kamaha pack. That means after completion of JIB, you can also look forward to your CIB as well. From this area, in terms of CIB, we have got all the 5 electives as well. That means if you take up this batch, you can prepare through this particular Mahapack not only for the examination of JIB but also for CIB as well. So what you can do is you can check out the further details. The validity is currently for 12 months. Hai. So if the validity is for 12 months, it has now become 12 plus 12, 24 months. That means the JIB and CIB would be available for you not for 6 months but for 12 months already. Plus 12 months, you also get 12 months free. That means you are getting your complete 2 years to prepare for JIB and CIB. If you prepare before time, then you can also give the examination before time, because you're getting everything, all the resources to prepare for the examination here only, right? What you need to do is click on the area of buy now, use the code Y5541, and you can purchase it for 10,799.20. That means you will get this particular pack for at 81% discount if you go through the app. So kindly do it through the app so that you get maximum discounts there. So there you will buy it at less than 10,600, 700 around. That is where you will be getting it. So if you get it there, you are getting it for 2 years. Number one, you are getting it for two different courses as well. And not only the syllabus classes, but also the revision classes, ebooks, test series, and power pack batches, whatever we introduce. Because just before the examination, we come up with revision batches. Then along with this, we come up with the video classes, numerical batches, and your case studies are also going on. Whatever we are providing, whatever, English medium or bilingual, everything is available for you. All you need to do is click on the area of buy now, use the code Wi-Fi41, get 81% discount along with double validity. That will ensure you get this particular opportunity to buy it at minimum cost, and the maximum benefit is also available. So if you're looking forward to it, then kindly go ahead and hurry up, because it is for a limited period of time. As our new batches here, you can purchase it in time and you will be able to continue with the live batches. So that will help you a lot, that you don't have to rush and recover from whatever has been done already in the class and then coming up with the classes, right? You have the ease there in terms of your working. So go ahead and check it out on our website or in our app for further details. I'll be meeting you tomorrow at the same time in the morning, 7:30.